Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York on Thursday. Happy Aloha Thursday, as we say on the islands, 24th day of March, 2016, and this is the Daily Report for Gold and Silver, our weekend review, coming to you a day early in honor of Good Friday, in which markets will be closed. And of course, on the weekend review, we combine all of the markets together, trending markets as well as gold forecast, to give you a much more broader scope and breadth of market activity this week. And we certainly saw a lot of it this week. Precious metals first, under dramatic pressure throughout the better part of the week. We'll look at gold and silver, but first to gold. As you can see, it's trading roughly off about $2.5, $3 on the day, $12.17 and change. The high has been $12.23, the low $12.12. So as you can see, not very much range on the day. So traders, it looks as though we are going to see about a $7 lower close in gold at $12.17. That is COMEX, currently just settling right now at $12.1690. We are looking at a daily chart, but on this daily chart, we really have our big picture. Our big picture looks at both the major, intermediate, and then the subcount behind the intermediate. Of course, major A, we believe that that concluded when we hit these bottoms here at about 1050. This, of course, began to occur at the end of last year and really took off at the beginning of this year. These are when we see these lows. Now, the way that we looked at it was that we had our large A, and then that large A was composed of 5 legs, so to speak, this being leg 3 here. We haven't compressed it enough to see the entire thing. Intermediate 4, and then an intermediate 5. You can see our intermediate is in red. Then we've got really our subcount. There's a subcount for all of these, but we've only included this final sell-off where we have really on that fifth wave, wave 1, 2, 3, 4, and our concluding fifth wave. And after that, I believe we absolutely concluded the A wave. We have begun a major B, and on the major B, we once again have to start with that subcount. Just as we ended here with the subcount 5, I believe that we entered our subcount 1 of the B wave, and that subcount 1 concluded at 1288. That's this top here, and I believe that now we are in a subcount 2. I believe the subcount 2 could take us anywhere between, call it 1205 and 1195. That is our target to actually go ahead and buy, because following this correction, we should see a very, very strong wave 3 moving us past $1,300 per ounce. So the chart that I have put up is a simple candlestick chart. It does have half-day candles, 2 candles per trading day. And in this chart, I do have that sub-count that is behind this one that we just spoke about that I believe was completed. And we are now in a wave 2. That is this A, B, and I believe we're in our final throes of C. As you can see, it really came up off these lows at about 1050. Wave 1, wave 2. An extended wave 3 was actually 261% in terms of the retracement or extension, excuse me, from wave 1. Our compression triangle, which took us and completed a 4th wave, and then our final 5th wave took us up to these tops at 1287. Now from there we went into a corrective period, a wave 2. Wave 2 so far has been composed of an A. Our B came precisely to 75% that of A. That is how we really picked this high throughout this week, and we're able to identify it and really warn our traders that that was really where the market would run out of steam. My sense is that we will probably see some support come into this market, and we're going to go in and buy this market when it gets to approximately $1,200 per ounce. So traders, a quick look at silver. Silver under tremendous pressure this week. We can see that as we look at this weekly chart. Realize this, I've got one fib retracement from about 1850 down to these lows just below $14 per ounce. And when we do that, we get a 50% retracement area, and that comes in right at around just above $16. And as you can see, market comes down, makes these lows here at about 14, comes up, and you can see major resistance right in this area, a lot of downside pressure. Market comes back down and makes this lower low, 1369, and as it trades up, it once again finds this tremendous headwind right at around 1600, and we don't really see any support in silver until about 1481. After seeing the dollar fall from grace for about the last 3 weeks. We did see the dollar recover this week, closing up substantially on the week, nominally on the day. So traders, no doubt the dollar staged a pretty dynamic recovery this week. Of course, right now speculation as to whether or not the Fed will raise interest rates seems to be leaning towards possibly a 1/4 point raise. That, of course, would strengthen the dollar. You can certainly see that on this week's trading activity, this being, of course, a daily chart. You can see how it came off of these lows at 94.50, and it traded right up to the resistance area that we had identified on last week's show, which is roughly at 96.40. That's up here. When we look at our weekly chart, and this, of course, is the insert, you can see that we had that dynamic move up. We still show support right now in the market at roughly 95.30, resistance at 96.40. All the markets are quiet today. Crude oil is trading off, but off about 0.5%. Not really a dramatic change for oil. The key, though, is it is below $40 on the close at $39.59. So traders, we've now seen oil trade higher for approximately 7 consecutive weeks. We're looking at a monthly chart right now of crude oil. You can see this is January's trading activity. Of course, February, we had that doji star, and then this dramatic climb that we have seen. However, when we look at a weekly chart, you can see that over these last 3 weeks, body size has been diminishing. This week, we've got almost a doji star, and I do believe that we have some resistance at about $40 per barrel. Of course, with the markets being closed tomorrow in honor of Good Friday, we did have quiet activity through the day. However, the one market that really had some volatility was the U.S. equities markets. Equities markets did close higher on the day, 17,515. When you take a look at the low, 17,399, you realize it's up 13. At one point was down 100. That also brought some pressure on the Standard & Poor's 500, which right now is going to close in essence unchanged on the day, 2028. Of course, we had stops just below 2020, call it 2019. And when we look at the low of the day, it was 2012. So we were stopped out on our long S&P 500 trade, but we were stopped out with a healthy profit. Traders, of course, of extreme interest to us is the Standard & Poor's E-mini contract today, closing in essence unchanged at 2028. But as I said, it did have a low of 2012, the high on the day 2029, so we're closing near the high. When we look at our single candlestick, and that's right here, you can see what a pure doji we have, open and close right at the same spot. Now, this does affect a trade that we had on prior to today. We did get out of our trade today, and we got out as a stop was hit, and the good news is it was hit with a substantial amount of profits. Now, we originally got into the market at 1979, so we got in right in this area. I believe it was this candle right here. I'd have to check the date, but as this market traded higher, of course, we went ahead and trailed our stops up. Most noteworthy was a few days ago, of course, when we saw the Standard & Poor's actually break above its 200-day moving average. That would be this solid blue line here. And interestingly enough, the low that we hit was right to the 200-day moving average, closing substantially off of that, this being roughly at 2012. Now, we were stopped out just below 2020, so we were stopped out at 2019. We got in, as I said, at 1979, so we've got quite a nice profit. We'll go ahead and put the calculation on the screen, and the calculation that you're seeing right now in terms of profit is based on a single contract of the Standard & Poor's E-mini, those trading multiple contracts. Obviously, you can multiply this profit by the number of contracts you had. We'll have to take a look on Monday to see how this market holds. We absolutely detected some weakness over the last few days, and we also identified a three-river evening star. We talked about that on yesterday's show, but we also talked about the fact that you need to see a confirming candle. Now, the fact of the matter is we would have only gotten confirmation of this pattern if we would have closed on the lows of the day. But the fact that we had such a resilient recovery really negated the confirmation of a potential sell signal in the Standard & Poor's. Obviously, we'll want to take a look at this on Monday. Traders, no doubt, we have seen tragedy once again this week in Europe. And as I said a couple of days ago, our hearts and prayers go out to all of those affected in Brussels. As we go into an extended 3-day weekend, I want to wish you and your family a great 3-day weekend. Health, happiness, prosperity. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for another daily update and review.